Some of you, I did give a presentation earlier today over at 4240. How many of you were there, out of curiosity? Okay, so it's a good number, which is great. I might just somewhere tonight kind of share just a couple of things I said there for those who weren't there, because I think it's a good context, but I don't want to spend more than a couple minutes on that. That's not how I want to start, though. We're fortunate to have Bill Schmidt here from Cultivation Capital, who has a family commitment in a few minutes, and so we're starting kind of promptly. And I wanted to kind of get into the beginning of the conversation while he's here, before moving to ultimately what I want to do is kind of breakout groups. That's one of the reasons we left the co-working setup. So we'll have some general conversation, some smaller group conversation, and then come back to general conversation. We'll also leave time for food and drink, and at any point you should feel free to get up and get drink. I'm suggesting we use unconference rules. That means that if you're bored with whatever you're hearing, just leave. Go do your thing. This is not a one-to-many. This is a kind of a many-to-many consenting dialogue. The topic here, as Dugan mentioned, is bringing more access to venture capital from outside the St. Louis area to companies that are in the St. Louis area. We're not the first people to be talking about this. This is not the first time this has been discussed. This is a long-running conversation. There have been some significant efforts. At BioGenerator, Dan Broderick does work directly focused on this, and in fact has brought groups of St. Louis startups out to Boston and to other cities specifically to present to and meet VCs. There are a lot of great efforts in this area. I want to start with that. So we're really just talking today about what are some of the things that we may not be doing that we could do more of, creative ideas. There are groups that have the capital to support new ideas and are willing to put funds into it. We have some great conversations going on with MTC about that right now. Was I allowed to say that, Travis? Sort of. Yeah, okay. And conversations. And in the New England area, as Dugan mentioned, I'm fortunate to be very close to the venture community. CIC there has been there for about 15 years, and just a stat, we now have $7 billion of venture capital headquartered within the CIC buildings just in Cambridge, which, to put it on a spectrum, that's more than the state of Texas, just in the two buildings in Kendall Square. And that's started from a base. All of Cambridge had essentially zero venture capital in 1999 when we got started. So it's not, so you can, there are things you can do, and we have done some of these things in Cambridge to kind of bring in and concentrate and build the venture capital base and make it more accessible. So that's the proposed subject for tonight. There are two or three kind of big ideas out there sort of already, and I want to kind of get those on the board and encourage some dialogue about them, see if they'd be good ideas. Before he goes, though, I'm going to put Bill on the spot because we were talking about this earlier, and I want to give him a chance to sort of weigh in. I'm going to ask a few people to share their thoughts on this topic, but starting with Bill so he can go, but not leave, ending with you. And so this isn't, again, I want to have as many points of view on the topic. I think, Marcia, you've probably been working on this longer than anyone else, and I'd love to ask you to do the same. And as others, feel they would like to jump in, I'd like to ask them to do that. So Bill, can I ask you to just share general thoughts? Again, this is a brainstorm dialogue. There's no right or wrong answer.
Okay, well, the first concern that I have, just in general, our fund has been in St. Louis for about 20 months now. Just specifically in the life sciences space. Naturally, the tech fund has been around for about a year and a half prior to that. But one of the things that we always struggle with, and have so for 20 months now, is just plain and simply raising capital. And we do so not through institutions, because my partners and I don't necessarily have a track record. We are all successful entrepreneurs. I just had a successful exit last October. And I've had more coffees and lunches with high net worth folks trying to get them to really have an appreciation for this asset class and to essentially be participatory in what we're trying to build here in St. Louis. And while it's all great for economic development and job creation and things of that nature, make no mistake, we're in this to make money. And getting people to believe that this is an investment that is worthy of their dollars is a challenge. I think we make headway every month that goes by, but as we've gotten into our fund, and we've now made 10 investments over the last 20 months, I really look at what we're doing. It's very, very important. A box that we have to check whenever we make an investment is that we are, and I mentioned this to you earlier today, that we are really building a strong syndicate. What does that mean? That means that Cultivation Capital isn't participating in a $3 million round and we're putting $1 million in and the rest is in one or two other entities. We want to have a syndicate that's built whereby it's maybe a venture group, Jump Capital out of Chicago, or Roseworth out of New York, or Bell out of Detroit, or Broadview in Boston, who we've worked with in the past. And we're building some people who have really deep pockets and participants that have dry powder, or adequate dry powder, as we begin to work with the companies, be active in their growth and development, and as they kind of knock the ball up and down the fairway, that they're achieving appropriate milestones such that the syndicate that we've built is the strength and foundation of the financing of the company, and we can clearly help them down the road. So it's something that I think about all the time. I know that there are upmarket VCs that are keeping a keen eye on St. Louis, and we're looking to build strong relationships with those folks, and anything that can come to this meeting here in terms of brainstorming will be welcome from Cultivation's perspective.
Thank you, Bill. Marcia, do you want to share thoughts? I'm volunteering two of you. I'm not going to volunteer anyone else. You're going to have to volunteer yourselves.
Well, I think that obviously that when we get to a certain point, we can raise a certain amount of money here in St. Louis, and when you get to a certain point, you have to go outside. And so we've had issues over the years. We've had a lot of really good companies that get told by VCs in Boston or California, we'd love to put some money in your company if you move your company here, but we're not interested in getting on a plane and going to St. Louis. So, that is an issue, but I think it's becoming less of an issue the more that we have outside VCs invested in St. Louis companies. And so I think it's really important to have some of those key companies that have attracted capital that hopefully will stay here and continue to build their companies here. Then those VCs are coming in for board meetings and hopefully are willing to look at other companies while we're here. So it's a building process. At the same time, we need to continue to build later stage capital here, and I know there's some initiatives in the works now to do that, but that is absolutely critical in keeping companies here. We are great at starting companies. We've started wonderful companies here. The challenge going forward is going to be, can we grow those companies here and bring in the amount of capital it's going to take to grow those companies.
Thank you, Marcia. Many of you know Marcia's been involved with CET for a couple decades, something like that, right? She started when she was 2. So I said I wasn't going to call anyone out, but I noticed that Ginger just walked in. Those of you who don't know her, I think everyone does. Ginger Imster runs Arch Grants. So this is a dialogue leading to a brainstorm, and we're beginning with just asking a few people who've spent a lot of time thinking about this topic of bringing capital into St. Louis from outside St. Louis, kind of what their opening thoughts are. And would you like to say a couple words, Ginger? You can take your jacket off if you want.
Do I need the microphone or no radio?
It's actually probably better with a microphone. We tried it both ways earlier.
Service. The service at CIC and CBT.
Well, I guess most importantly, I will just echo what was already said, which is the building of capital, and Cultivation Capital is certainly an important partner to Arch Grants, and we need other firms that are willing to make those early stage investments. I think our frustration and our concern, thank you, is that at Arch Grants, when we see the companies that are coming through our portfolio, are we able to match them up with venture capital that will force them to leave St. Louis, or are we going to be able to create those investment opportunities here that will, to your point, enable them to grow here? And I think for us, looking at these regional capital firms that are throughout the Midwest that are willing to invest in companies here. How do we make a concerted effort as a community to get those firms in other states to look at investment opportunities here? Because those are the firms that we already know through initial conversations are not as inclined to make our companies move and are looking for the right opportunities for investment. So how do we create those opportunities for them? How are we ensuring that they're getting our best companies before them for consideration? And then ultimately, we're all waiting for that wonderful moment when we see a big exit or acquisition. And then, of course, we also fund companies that just want to be the next enterprise and be privately held and be profitable here for a long time, too. So I don't want to forget about those as we talk about the building of capital. But it's very important for us to maintain relationships with those firms that aren't going to make our companies move.
Thank you. As I said, I was going to next open it up to volunteers. Do I have any volunteers? People have been thinking about this topic for a while that would like to share their thoughts about bringing venture capital in. I do promise you we have some very concrete stuff to get into, but I think I want to kind of get the initial thoughts out first, if possible. Yes? Will you introduce yourself?
Hi, I'm Ed Bingham with Explore BioVentures, and I've been around the community for a while. I was at the opening for CET in 1998 when it kicked off. And I think one thing I don't see around here, there are companies that have successfully raised money from outside the region. And I'm thinking like Stereotaxis, I'm thinking like Cardiolin, I'm thinking like Isto Technologies, so Apastry. I'm wondering, have we done any surveys of those companies to see how they went out and sought that funding and actually achieved it? I'm thinking like Cardiolin. They went to St. Louis Archangels. They went to Centennial, I think, Angels in Columbia, Missouri. They went to Twin City Angels up in Minneapolis, St. Paul. They leveraged that. They got funding from France, from Broadview Ventures. And a company like Isto Technologies, which has been around for 16, 17 years, they've raised money from Alafi Capital in Berkeley, who has invested in a number of startups, including Stereotaxis. So that's one thing, just a question I'm asking to kick it off.
That's a great question. Thank you. So I'm going to sort of scribe here as kind of action items or to-dos come up. Do this, do that. And so I think the notion of, does anyone know if such a survey has been done, by the way? We don't reinvent the wheel? No? So, terrific idea. That's an easy one. Let's work on getting that list together of folks that raise significant professional risk capital from outside St. Louis and find out how they did it.
Well,
Yeah.
we did survey our companies when we did an annual survey. We asked them where they got their money from. We did not publish the information because these were private companies.
So we might be able to
But
go
we do
back
have
and look at
records.
some of it's both who they got the capital from, but I think maybe the question was also, how did they go about getting that capital? Like, what was it personal relationships that were pre-existing? Did they do a roadshow? What were those things? I'm gonna, do we have any other volunteers? Because I have one more actual person I'm gonna call on, but I'm not gonna tell him. Good. Yeah, in the back. Dan. Next.
Hi, I'm Pete Browningkey. I'm the managing director at Arsenal Capital. We're a relatively new fund here in St. Louis. We've been around 2 years, and we've raised about $30 million. And I would agree with Bill that the challenge is to get the St. Louis area to kind of believe in venture capital. I mean, you go to Boston or Menlo or Chicago or whatever, even places like Nashville and Indianapolis seem to have a lot more of an entrepreneurial bent.
I gotta say, I was just talking with folks from Indianapolis, and we think we're ahead of St. Louis. That's what I heard from them.
I would probably agree with that, at least when you look at the amount of money. But we've had some experience partnering with out-of-town firms. I will tell you, I'm very involved with Apastry as an investor, and a lot of it comes down to where the investment bankers are. If the bankers are out of Denver or Chicago or the coast, they're going to bring those relationships that they have. So, one of the things that I would look at in St. Louis is whether there's investment banking here that would allow us to, network with some of these other firms around the country. But I also will tell you, if the deal is good, if the company is good, the money will come here. We've had some opportunities where people have said, yeah, would they love to have the company in their backyard? Would they want to do the travel? No, they don't. But if the company's good enough and the deal's structured right, they'll show up. So.
Thank you. I know we had a hand in the back, gentlemen, and then we'll get to you, Eric. Or is that a question?
Yeah, I have a question.
Sure, go ahead.
Why not St. Louis? Like, what would prevent things to start here? I hear the distance, the flying. I fly every week all over the world. I'm 2.5 hours from anywhere in North America.
So I can answer that question. I led an investment in a Albuquerque, New Mexico company out of Boston. We loved the technology. It was a biometric fingerprint sensor technology out of Sandia National Labs. Technology was first rate. I spent 12 years, 4 times a year, flying from Boston to Albuquerque with a stop. And most venture capitalists are not going to do that. And having done that, I have a higher bar now on doing that. Sorry?
You can get a direct flight pretty much anywhere.
So I'm just giving you the answer.
Yeah.
So that's the barrier. Is if I have a choice of investing in a company that I can drive to from my home or one where I have to get on a plane, it's just going to have to. It's a higher standard. If the company's good, as you said, that people will invest because it's a good opportunity. It's a higher standard. The flip side is that for the company here in St. Louis, if it can attract that capital, it gets access to those relationships that the VC has. Whether it's buyers, customers, new hires, et cetera. And the reason that we thought it was important to have this conversation is that we think that it's critical for St. Louis, the success of the ecosystem, to bring more capital from outside. Not because you need the dollars, because there's plenty of money here. It's because you need the access to those relationships. And so the other thing that we look for, and was a requirement of my partners when we looked at making investment in New Mexico, was, is there a local VC that we trust that will be the lead locally? Because we're not going to be able to be there all the time, and if the CEO quits or something, if there's something that happens, we need people who are on the ground, who are wired in the community, that are also tending that investment, because we're not going to be able to do as much. So Bill and I were talking about this earlier today. And we'll get into this a little bit later in terms of how we might structure that. But I think a key piece of this is the local investor. It's not just the company and the outside St. Louis investor. It's that local investor has to be a key part of the equation. So is this a question on this? So then we'll go to the next kind of commenter. Yeah. Sure, go ahead. All right, we'll get you. Let's have him ask the question, then we'll move to the next comment. Yeah.
Hi, I'm Dave Blankenship. I would like to see us partner with a group that is an angel group, it's a venture capital group, and they have training called Golden Seeds. They're an organization that invests only in women organizations. However, their Knowledge Institute trains people on how to be investors. And I think some of our local people who have significant wealth, who are afraid to invest in entrepreneurial ventures, might help. I think Prosper Capital, the Prosper Group, dealt with them a little bit, but I don't know what the results were, but I understand later that there's something perhaps that can be done. So thank you.
Yeah, we have Golden Seeds in Boston, and particularly for women entrepreneurs, which is their focus. They've been terrific. So, sir, you had your hand up a couple times, and we will get to you, Dick, and the others.
Hi, I'm Chris Lamo with Gateway VMS. So it doesn't necessarily move us directly into Series A, but what's this?
Louder.
Louder. Okay, perfect.
Yeah.
Louder. So a couple weeks ago, with Ben Burke and Matt Minetti and a few other people, back in August, we've been contacted by Schlafly, and they said that their leadership was really kind of looking to figure out what is the entrepreneurial movement about and how can they get more involved. And so after we went back and forth with them for a while, they wanted to host a happy hour of sorts to have some entrepreneurs. But really what we did was, and it wasn't an ask for money, but what we did was we picked 6 entrepreneurs that we felt had something to either sell to Schlafly or could really use partnering and guidance with them. And it was really cool. 3 entrepreneurs into the 6 that we brought forward, one of the guys said, "It's a shame these sessions are only 15 minutes. I really wish it was longer. This is fun." And I think it really showed us an opportunity of small and mid-sized employers, of them potentially engaging and not really looking at things from an investment standpoint, or who can we introduce as early stage entrepreneurs as potential customers. So that was certainly something we're working to cultivate with them, of further introductions to their friends, because they could turn around either buy from these entrepreneurs or potentially even invest, because some of their new investment and ownership was part of those conversations.
Thank you very much. So Dick, I saw your, I think most of you know Dick Fleming from the Chamber originally.
His face looks great.
Thank you.
Nice job. Dick Fleming with Community Development Ventures, but in a prior life, for those of you who don't know me, headed the Chamber for about 17 and a half years. Been on Marsh's board for 20 years, I guess. Something that might make sense revisiting, that really was a springboard for a lot of what we've seen in the last 10 to 12 years coming out of the life sciences. When we had the BioBelt strategy emerge in early 2000, we had a tradition of taking about 100 of our leaders to a different city for 3 days, once a year, around a set of issues that we were dealing with that community had really done a great job on. And appropriately enough, we went to Boston, we went to San Diego, we went to Toronto, back to back. Boston was the 3rd of those that we went to. And Marcia will recall this. The magic of it was to get everyone to go through the experience together. And we had Marcia and Dr. Danforth and John McDonnell and John Bachman and a number of the CEOs of the major companies. And we focused on a couple of issues. We looked at real estate and MIT and how much they had invested in real estate. And that got the attention, and Mark Wrighton and Father Biondi and Tom George were all on the trip from the universities. And we had a magical sort of epiphany one morning with Peter Brook, who told the story of the venture capital, the formation of venture capital to start with back many, many years ago.
One of the fathers of venture capital.
Yeah, and that led to a series of hybrid sort of fund-to-fund relationships with John and Peter. And the critical issue, and it's one that maybe we can come back to, is Bill Danforth and Mark Wrighton and Larry Biondi came back here convinced that they should take a portion of their institutional endowments and put it into early stage venture capital for the life sciences. And that spawned things like the efforts of Prologue and RiverVest. We heard this story last week at CIC about how that had materialized. Maybe with the blossoming of things that are happening now with cultivation and Ginger's effort and so on, maybe some of the other institutional players are ready for that kind of experience, not just the universities, but some of the major companies who now have a little bit of a context, a broader context in which to do it. So that would be a to-do to look forward.
Can you state that to-do succinctly so I write it down right? Replicate what WashU and SLU did with leadership institutional investment, with some of the major companies partnering with the firms that are now active in early stage capital and frankly later stage capital, which is going to be another issue that we're now going to need to face. I don't know if that's short enough, but. I'm going to say replicate the WashU SLU institutional investment leadership intervention.
Yeah, that's good.
Okay.
With institutional corporate investors here, because we got a lot of them.
Right.
I'll make one other quick comment, and then unfortunately I have to take off. But This is only an idea at this point, but Cultivation Capital, the general partners in our back office, we've discussed putting together a venture conference here in St. Louis. We know that upmarket VCs are probably not likely to attend a conference, at least the general partners of a particular fund, and you all know the names of the big funds. But what we were thinking, and this is something that you guys can discuss, is putting together a venture capital conference that would be attended by the associates of the firms, knowing that as the associates grow and develop over the next 2, 4, 5, 10 years and begin to move up through the organization and become partners, they're aware of what's going on in St. Louis. And clearly the goal of the conference would be to put together training on due diligence or valuation models and just things of that nature, such that we could maybe get some of the associates to become more aware of what's going on here, so they go back and begin to tell some of the general partners. So
I know how you could make that work. You just have to throw a really big party. Because the associates at these
Free food
funds
and alcohol.
like to party.
that's right.
We can work on that. We'll have a party planning committee over here somewhere. Thank you, Bill.
All right, thank you.
Sir, over here. Oh, actually, you had your hand up first, and then we'll go over here. Go ahead. I think you should. Hearing in the back is a little tough for that.
I'm David Weaver. I'm a lonely founder over here at 4240, trying to figure out how to get a financial industry startup. But in my prior career, 15 years ago, I was a partner at the predecessor to Posanelli. And here's my suggestion. What can we do to broaden the pathways to venture capital through other people, in particular, co-founders? And the examples I bring up are, at that time, we were one of the few firms in St. Louis representing venture finance firms. And we had, for example, in particular, one cluster of founders in the healthcare industry who did 3 different venture financing deals. One of them we took public, 2 we sold. And in each one of them, one of the reasons they had so much clout and ability to get coastal money quickly was one of their co-founders, almost in paper and name only, was a prior founder of Republic Health. And so what we had, it was through relationships, but what can we do to foster relationships for the type of people who, one of the things we always hear is, how do we expand, get a co-founder? Well, who that co-founder is means a lot. And can we bring people like that? Because that will attract, in my view, because we saw it, money from other sources, because these were people who had raised money and taken things public. And then the people who had done that on those companies were capable of being co-founders on down.
What was your name one more time?
David Weaver.
David, thank you. So I think that can work. That's a terrific strategy. I actually I was one of those co-founders for a startup in Singapore about 15 years ago. The main founder was a college friend, and he had a cool idea, but he didn't really have sort of US connections. And I co-founded, it was pretty active, but really what that meant was the kind of weekly phone calls and things. And we raised a couple $1 million of VC in Singapore off the existence of that connection. So I think that can work. Over here, sir.
I'm Ben Brink. I think a lot of people know who I am. I wanted to follow up a little bit on what Dick was talking about, and I'll just do it in a story. I moved back here from Silicon Valley in 2002, and then I went away to do some things, notably in Afghanistan. I came back and have re-engaged in the entrepreneurial community in the last couple of years, and there was a very remarkable difference between what was going on in 2002 and what was going on now. And I think the first suggestion is that I'm not sure we really need to talk about why isn't there venture capital in St. Louis, but rather when and what needs to happen to make it happen. 2002, there were some wonderful efforts which were largely top-down to sort of direct ventures to make things happen along a model. What we're seeing now is what we've seen in Silicon Valley, we've seen in Boston, we've seen in other places. We're seeing a lot of new stuff bubble up. And there are some real gaps. Early stage management doesn't get paid. We don't have a lot of round A. There's some other issues. But what we're almost almost there about is deal flow. And what will attract venture money is deal flow. And the issue is in 2002 when a
Our
lot
friends
of
in Silicon Valley say that it's very hard to keep employees. The turnover rate is very, very high. People are always sort of making a calculus. Is this company working, or is somebody going to jump ship now? And we all know that building a company can take 5-10 years if you want to really build a great company. And so when you have talent that's willing to stick around and put their back into it, that's many founders think that's more important. So are there others who have not yet had a chance to share their views on this? Yes. Tell me your name.
Bill.
Bill.
Hey everybody, I'm Bill Bensing. I'm hearing a lot of big ideas, right? Bringing this big money in. I'm thinking from the little side, right? So I look at crowdsourcing, right? And I look at not having enough money to invest in a big fund, not a lot of, but I have pennies here and there that I could contribute. So what about some small funds for the local economy to get into? Maybe some investment funds. I mean, we got some big companies here. We got Boeing, you got Express Scripts, you got a lot of people, and they have retirement 401ks. Where is some type of small asset class for those folks? Something they could put 5-10% in, something small there. Let's invest in local community, but also crowdsourcing. Why don't we think about a platform that you could go in and you could put $5 or $10 here or there, almost like an investment. I don't know technically how this would work, but allow you can throw money there for people who are interested in the funds. We talked about communicating, walking people through, like here in CIC and at CET and 4240 would be the perfect way for local people to see how their investments are doing, coming through the co-working spaces and seeing this type of stuff. So I think you could possibly raise a lot of capital that way and letting people reinvest in the local community.
And your company again, Bill, was?
I'm trying my own startup here, so I'm actually an opportunity to sit here. So I'm trying to redefine the way that we share money between friends.
Okay, maybe we can share money between friends for startups. That's terrific. So anyone else who has not spoken yet? All right, I'm going to call you Dan. So Dan Lohman, I know, has been working to raise capital outside St. Louis as a St. Louis startup. I'm just curious about reflections from that process.
Sure. My name is Dan Lohman, CEO of Push Up Social. And like Tim said, we've been raising capital for Push Up Social. We're still on the early side in terms of we haven't gone to raise our Series A round, but we've raised a pretty significant amount of capital from the angel community, friends and family. But I would say that I'm in that mode of getting kind of ready to go out and raise that serious money, that Series A money. So we've been having conversations with VCs in Boston, in Silicon Valley, and there definitely is, in terms of challenges, there is an idea that why aren't you here? There's a lot of funds that I talk to specifically in Silicon Valley say that you're engineering for the exception being in St. Louis. So I don't necessarily think that's the case, but that's something that we need to, I guess, deal with in terms of practicality. So one of the I guess, thoughts that I had was there are other VCs outside of just the coasts. There's a fairly robust burgeoning venture capital community in the Midwest, in Omaha, and there's some in Kansas City, Lincoln. I think that potentially those firms may be lower hanging fruit to companies in the St. Louis area. So actually connecting with some of those companies might be a good idea, or creating ways to connect with those VCs. Another challenge that I would say, put on everybody's radar. I think we in St. Louis have done a very, very good job recently of celebrating our successes, which are getting a lot of investors and entrepreneurs excited about the scene and jumping in. And I think we've seen a lot of investment in the early stage, and we have tremendous organizations like Arch Grants that are creating that deal flow. And I think we've been very successful on the early stage money. I think we have a wave of companies that it's a serious issue that we need to bring in that Series A funding to really allow that wave of companies to really progress and grow.
So, thank you, Dan.
Yeah.
Ginger also has another commitment, but she has written a dissertation here with a few other ideas, and I've asked her to share them with you.
So I run one fairly well, but today has been an unusual day, so thank you for everybody's patience. So a couple of things. When I think about what I've heard tonight, and now that I've walked into it, and I've heard everybody's very thoughtful comments, there are three things that keep coming to mind. Keeping companies here, increasing available cash in St. Louis, which we know is a very wealthy town, but it doesn't mean that everybody wants to release the cash, and then encourage development of more startups. So, Dick has had this marvelous history in St. Louis with regard to the chamber and other initiatives, and I have sat in my seat and thought about how do we replicate Bio for Tech 1,001 times. St. Louis gives money to people they know, and Bio worked because of some of the names that Dick mentioned, inclusive of Bill Danforth and John McDonald. So it wasn't just the institutional investment between the universities, it was also these marvelous philanthropic people who were also reaching back to their entrepreneurial roots when Bill Danforth was thinking about his family's legacy at Ralston Purina, of course, and then John McDonald at McDonnell Douglas. And we haven't seen that same cachet for tech in St. Louis. So there hasn't been that cult of personality who steps forward and says to the peers in their community, give the money and do the same for tech that we did for Bio. And by the way, if you ask Bill when he knew that that was going to be a success, it was when Pfizer closed and the scientists stayed. And I don't know what the equivalent is here for tech, but that was a milestone for that initiative. And had it not been for CIT and the Danforth Plant Science Center, and quite frankly, our state, when the General Assembly appropriated the funding to MTC, what we've seen in the last 20 years probably would never have happened here. Going back to St. Louis, so our financial institutions, and the gentleman who spoke earlier and said, release the money, the banks. Where is he? I've lost sight of him. So the financial institutions in town, great idea. They are so conservative. So if you ask Jim McKelvey, did he try to raise money here first? Sure he did. And what did everybody say? No. And where did he go? California. So I don't know how we compel a financial institution town to do what we all want to see done, except for one of them to do it and have success. And so how do we bait it? How do we give one financial institution our very best prospect and see it through to the end and have a success story that can compel the other ones to follow? Because frankly, it's all about risk. And I don't know how we de-risk it.
You de-risk it by giving them, sorry.
No.
You de-risk it by giving them the most likely economic opportunities.
That's what I just said. But
it's a near stable company that is already generating revenue.
agreed, but we have to do that first. Like to think that our financial institutions are going to release the cash, I'm not saying it's naive. I'm just saying somebody has to experience success before there can be a compelling case to the other financial institutions to say release the cash.
Right. And so what I would do is I would break, when people talk about raising money in the area and that sort of thing, you need to really break down the companies that are here to determine who's at what stage of development. All right, kind of silo them and silo what money needs everybody has.
I agree,
Everybody talks about cyber.
and maybe that's something that gets captured on the board tonight as a strategy.
Right.
Yeah.
Strategy. And then from that you take kind of the cream of the crop of the people that are closest to potential exit that are generating 10 million or 20 million in revenue that could actually support have EBITDA support an actual loan from a bank.
Yep.
Just going to get them comfortable with it. I mean, the reason why people here in St. Louis don't give money to venture capital is they don't have the same level of risk tolerance.
Well, I want to make the very clear distinction though. I work with a lot of people, and people will release the cash. It's the institutions that will not release the cash. And so I want to make a very clear distinction between the people running the institutions and the people managing their own cash. And so when we're talking about institutional money, that's a different conversation than when we're talking about angel investors, where they do need to be educated so that they understand what a qualified investor means. And so I just want to make the distinction between those two things, because there are people in town who have the money who would release it individually, but they don't know what a qualified investor, they don't even know they are one, that they could be one.
But how does that compare with what Bill was saying about all the coffees that he's had, trying to get people, high net worth individuals here, trying to contribute money.
So Bill and I are in the same game for different reasons. We're both about people, place, and purpose, and I just don't want to make any money, and he wants to make money. And if Bill were here, I would say it to his face, and we're in the same business because it's fundraising. And if we compared notes, it's the same gig. It's all based on relationships and trust. And that's how you actually de-risk a market.
Can I add to something here?
Yeah.
I just want to add one, there's a question for Ginger in just a minute, but one piece maybe to this. So Bill and I were talking earlier today about a kind of a crazy idea, and I don't know if this would work, but this is the sort of first maybe out-of-the-box crazy idea that's probably really a bad one, but all the other ones are good ones. So different investors have different risk tolerance. Some want to make money, some don't need to make money. And I can think of about 5 different sources of capital that a given startup might be able to tap that have a different valence on this. I'm just going to throw out the possibility of a kind of what I'll call a layer cake financing. This is a structured financing for a startup that has a series of tranches coming from different sources with milestones in between where everybody jumps in and commits. So here's the idea. So the layer 1 might be Arch or somebody like Arch. Says we're going to put 50K in, we know we may lose this, we're taking a flyer on you, we believe in you, and we don't have to make money. Layer 2 might be some form of crowdfunding. Someone was talking about that earlier. You know, friends and family, some other folks that are come in for maybe 50 or 100K on top of that. Layer 3, and it could be 2, but layer 3 might be like an MTC. Some of these more public finance, but still venture-oriented groups that are looking to de-risk a little bit. They're looking for some evidence that their money should go in, and so seeing a little bit of sort of friends and family and an Arch come in before them might make them comfortable. Layer 4 would be a local VC that says, look, this is all milestone based, so you know, nobody's ever successfully compelled an investor to invest on a term sheet with milestones. So this is more of a, if you do these things, we promise to invest, and if something really blows up, you don't, right? But might be a St. Louis VC that's saying, look, if these milestones are hit, then I'm pretty interested, and so I'd be willing to say I'd put $1 million in. And then layer 5 might be a coastal VC, let's say, or an out-of-town VC, where you actually structure, I'm thinking almost from the beginning. It works a bit better in bio than in tech, because you have kind of clearer milestones in many cases. Where if you brought to our fund or another fund in Boston the notion that says, look, there are 4 other layers of capital in here that are going to kind of get the company to where it's going, but we want you guys to say that if XYZ is accomplished that you're in, and we want you helping along the way to get us there. I don't know, I think this is just in the crazy box, but I want to throw it out there as maybe a way so that you don't get in the situation, I got my 50K, now I'm planning on only having 50K, and I'm going to spend 50K kind of hoping there's maybe something. I can actually plan on a slightly bigger, longer term run, hire for that, and then hopefully, get those later guys in. Yeah, there was a question, go ahead.
Yeah, well, a couple things occurred from what you were saying. I mean, first of all, the model, which is very, very similar to St. Louis today, is Boston in 1960. Very wealthy, totally philanthropic people. That generation needed to die, and the next generation was entrepreneurial and wanted to invest to make money. And we're seeing that happen here. The next trust fund baby generation is putting money in investments where they can make money. So I think we're seeing some mega trends here that happen, which are going to cause things to change. But you also mentioned that I think the number is about 35,000 people could be accredited investors in St. Louis. A very large number. But most of them are plumbers and dentists and doctors and lawyers. They're not tech people, and so they're uncomfortable putting a couple 100,000 into one investment. And as you know, there's a firm here, iSelect, which is trying to allow people to invest more granularly and create a portfolio.
iSelect, Dan, it's Dan, right? Is here from iSelect, anyway.
There you are. I didn't see Carter. You didn't look like Carter. So I think there's real things happening, but I come back to where the real key is no venture community has ever been formed top down. It all has to bubble up, and there has to be enough deals to do and it gets people excited that they might miss out on something.
Right. So let's get Ginger a chance to
Got
just
one more.
give her last one, and then she can
I
go.
promised to, yeah.
She promises to leave.
So getting back to that point, and what does St. Louis know, and Boston in the 60s, philanthropy, right? St. Louis is the #1 most philanthropic city according to Charity Navigator. So if that's a strength, how do you leverage the strength, encouraging philanthropy to get the deal flow going? Because philanthropy is familiar, and it doesn't feel risky, and it's not intimidating, and anybody at any level can participate, theoretically. So the Partnership for New York, if none of you are familiar with the Partnership Fund for New York, it's a great model. And there are St. Louisans who are involved in that model. John Biggs, if any of you know John Biggs, anyway, he was a partner in that. And I keep looking at that and thinking that our community foundation could potentially be compelled to do something like that. Our community foundation right now is very traditional, but to Tim's earlier point about if there was sort of a sequence of events that a startup could, or an entrepreneur could count on, that if I do these things, this will follow. Not as guarantees, but to just see that there's sort of a trajectory that they could go through that would be additive, that would make a compelling case for them to start a business here, because there's a lifespan beyond an initial $50,000 Arch grant, for example. So the Partnership Fund for New York has the Fashion Tech Fund. They have, I think, 4 or 5 different funds that they're funding, all in the entrepreneurial space. And it leverages the best of everything that we've just talked about. Philanthropy, venture, institutional investment, with really good fund managers. And it provides a model that I think if St. Louis would look at it and think about how we can leverage some of our strengths, inclusive of philanthropy, it would allow us to engage a much broader population in St. Louis around this, so that we start to celebrate our entrepreneurs like we do our sports teams. Because as soon as it starts to feel familiar, and as soon as it starts to feel really real to more people than who are in this room tonight, then I think St. Louis has a chance. Otherwise, the 450 people who attend the Events Venture Cafe, that's awesome. But this is a much larger city than the 400 or 500 people who are attending. And it's this ripple effect, certainly. But when we know we've got models in the country that work, like the Partnership Fund for New York, I sure would like to see St. Louis make a serious pitch to do something similar in the Midwest, because this is an emerging market. The Midwest is an emerging market. VC knows it, and we know it.
I don't know how you want to do it.
All right, Dick.
I think your philanthropic track is a good parallel track. I would encourage looking west as well as east. The Silicon Valley Community Foundation just got another $1 billion this week, and they're doing what you're talking about. But back to Ben Brink's point, and the layer cake idea, the thing that I would carry forward from what we experienced with the roll-up on investment in life sciences was the Vectis model. Peter Brooks said, I'll put 100 initial million in if St. Louis puts 100 initial million in, and the condition that we put on it was that the board of Vectis had all of their meetings here. And so those institutional investors from two coasts were coming in and out of St. Louis over a period of years. And if we could emulate that in some of the other sectors in terms of getting other institutional investment and the two coast investment, it focuses on that issue you talked about of relationships. And as relationships develop, people discover the undiscovered opportunities that are here. And we have the beginning of the deal flow now that we didn't have 10 years ago.
Thank you, Nick. There's also a really interesting trend which is happening in tech, which may foreshorten some of these tiers a little bit in a very positive way, is there's not a lot of technology risk in tech anymore, at least not compared to a guy like me that started in the 80s in the Silicon Valley. That technology, that very high-risk phase, ends relatively quickly, and then it's marketing risk and operational risk, and that's more understandable to people in St. Louis because it's more like every other business in the world. And so there may be a way to kind of shortcut and get the people to where they need large amounts of money to get over to the noise level, because that's the problem today, and get out in the marketplace and market the product and become big.
Thank you. That's a great point. Yes, go ahead.
Can I add a practical point? I know it's a little bit of chicken and egg, but I will tell you from my side, one of the big frustrations in putting significant money in a startup is how they built their cap table. And, I'm not real familiar with crowdfunding, I know what it is, but I can tell you we've run into situations where we're looking at a company that says, I've raised $2 million and I got 150 shareholders. And now we want to recommend a change from an LLC to a C Corp, or we want to go from Missouri to Delaware, and you're running around trying to get people's signatures that put $2,500 in. So I think it would be a good exercise if we kind of had a structure that said, okay, where do you want to be? How much money is it going to take for you to get your company to where it's going to be, or where you want to take it? If that's $500,000 and that's the total amount you need, great. You can probably do that anywhere you want. But if you're going to need $10 million or $20 million or $30 million, you're going to have to adapt to the structure that's put on you by those late stage investors. And if you don't have it built, they're going to look at your cap table and they're going to go, you think flying in to St. Louis for a meeting is tough? Try and get 150 signatures every time you want to do something. So I think there could be, an exercise, because I think maybe the advantage that some of these firms have in Silicon Valley and Boston is they know what the structure is. They can talk to their friends, they can talk to, they can look at it and say, okay, here's how you build this. And I think the layer cake thing is fine, but you've got to make sure that you don't have this exponential growth as you try and go up the capital table.
It's a great point. We have, by the way, restructured companies when we've invested. You just throw them all in an LLC and you say, you guys are all one investor. Sorry. So, I mean, the new money speaks.
Yeah, if you want my money, this is what you do.
So we have a couple folks in the back, ma'am, in the cream. If you could introduce yourself.
My name is Claire Zielinski, and I'm a recent graduate of the Square One program that was held. Louder? Is that better? Yay, Square One. Anyway, and I'm also a native St. Louisan. I fully relate to what you were saying about the philanthropic nature of St. Louis, and I think there's a grand opportunity here to give St. Louisans that are willing to participate an opportunity to reinvest in the city. Given what took place at the end of 2014, people are aching for a way to be proud of their city. And I think there's an opportunity somewhere in this to bring investors together that are native St. Louisans to make this happen.
Thank you very much. I think there's a strong feeling of that. Ma'am in the black. Please introduce yourself.
Hi, I'm Kyra. I'm also one of the Square One student. I went to your talk this noon, and I was inspired so much. I came back to work before the talk was over. But it's not a joke. I want to say to the startup owners of this community, work hard to make your business as mature as possible so you can attract money. And I also hope Tim can spread the word. The startup owners here, so smart, work so hard, invest on us, they will make money.
Thank you very much. So I think I heard you say that you liked my talk so much you left it early. I got that. I think that's good. And then you said that was no joke. All right. So a couple people who are here who haven't spoken, I'm going to cold call now. Ed Hamadi, from Biogenerator. Ed's role is to help the biogenerator companies raise capital around the country and has brought groups to Boston and so forth. Really, we're just asking people to share their perspectives on this notion of bringing capital. It's kind of broadened in the conversation a little bit to all sources of capital. The original focus of this is really the more narrow question. It's fine to broaden it, but we're really focused on the narrower question of how do we bring capital from outside St. Louis in as a piece of the overall pie, recognizing the connections, customer connections and follow-on capital connections and whatnot that the outside funds can add to the picture.
I was late today. I apologize.
Yeah, that's right.
So, for those of you who don't know me, I'm Edward Hamadi. So I actually live in Boston now. So part of our firm, so BioSTL Biogenerator. For those of you that don't know us, we're basically company builders on the biogenerator side. And so the idea there is to build companies. We have our lab facility, a portfolio of about 50 companies, and so we're focused on this exact problem of trying to kind of go after the next stage funding. So in that role, I have kind of two main areas of focus. The first is identifying next stage funders. So all these things that we're talking about here today, this is what I focus on 24/7. The second element is to how to create new sources of capital, which is another initiative that we've been spending a lot of time thinking about. So I've been kind of listening to what people said. I apologize, I was late. I was actually getting off the plane from Boston. We're snowed in. So, but a couple of the themes that people brought up, particularly what Ginger said, I found very interesting. In our new capital kind of source creation exploration, we've talked to a lot of groups in town. And one theme of it that we've learned is that there's this divide between for-profit and nonprofit or civic interests. And so there's this definite motivational challenge if you're an investor in town, you want to get involved, you want to fund startups. And on one hand, it's, do you want to do it for the sake of the city? And is that the motivation? Or is the motivation for profit? We're finding that a lot of people want to see more mechanisms formed for profit. And oh, by the way, I'm also helping the city. But in the end, it's got to be built like a for-profit entity. So a fund, an institutional fund, et cetera. We need more of that. So we talked, I noticed that people mentioned Vectis and the community fund. So Vectis, I actually office with the Brook PE guys. And we've talked in some things I can't say openly, but there's a definite challenge when they talk about the double bottom line. This is one element that we'd have to explore more. But definitely think that we need to figure out this kind of for-profit element. I think the second piece is when you look at that, so for example, Biogenerator, a thing we talk about internally a lot is, okay, we build companies, we invest because we think that we have to eat the risk. And we do that a lot, and we do a lot of hard work to build companies. What is our credibility when we go to a for-profit investor and that conversation we have? Did we build it because nobody else would? Or did we build it because it's a good company? And this is a big challenge for us all the time. And we spend a ton of time explaining we've built it because it's a good company and we love the opportunity. It's in a therapeutic area that is hot and we wanted to strategically do that. But we spend our first 15 minutes of every conversation explaining that we are investors first, and we care about the community. So there's a definite theme there. The other pieces I would just say are, that there's a lot of things about smart money. You have to really show an investor that how are you building things? Why did you build it? What are the motivations? And so we spend a lot of time around that. The last piece of learning I'll put out, this is for the bio side in particular, is we spend now when we have meetings on the coasts, we don't just bring our companies, the management team. We also bring any kind of clinical advisors, anybody that, for example, if we're in San Francisco and we have a key clinical advisor from UCSF, they need to come to the meeting because it's most likely that this will appeal to those investors on the coast. Same thing on the Boston side. So there's a lot of little learnings and things. I'm trying to look at the list, but a lot of these things we just have to figure it out. Last point is we don't celebrate things enough. So I think we need to do this stuff all the time. And we need to basically get over the hump with the investors in town about that early stage investment is a relevant way to make money. Most of the time they don't view it that way. They view it as too risky. So we just have to get past that. Anyway, that's all I got. Anybody have any questions? I guess Tim's busy, so yeah, I mean, that's anybody else?
Moving the dial on the intersection of for-profit and nonprofit, right? So when Ginger very wisely noted that we are the most philanthropic community in the country, we're also now noted as the most entrepreneurial. And the intersection of that is social entrepreneurship, social enterprise, impact investing. So there are very real opportunities. And we have huge amounts of capital locked up in nonprofits and private foundations, $4.2 trillion in assets nationally. So it's not to be understated, and they're not mutually exclusive. And I think that's just the message we want to really share. And we all need to be working together, whether that's community foundation. Arch Grants is truly, in the space of social enterprise, they have moved the dial unlike any other component in any other ecosystem anywhere in the country on what's allowed when it comes to charitable donations in support of for-profit companies. So I just can't reiterate enough that when we talk about capital, and we are on the national radar, both good and bad, and there's a huge opportunity and it's ours to lose. So I was actually going to throw you under the bus if there wasn't this discussion, right, about the intersection and the opportunities for philanthropy. And so I was so glad to walk in late and hear that the conversation was already going. So, is that good?
Yeah, that's why I asked you to speak, so you wouldn't throw me under the bus. That was the plan.
I was going to say, don't call me Dick.
Okay. I didn't. No, he's Dick.
Yeah.
Okay, all right, I'm confused. Anyway, so, but I'm bummed. I want to break and get everybody some alcohol, and just have a little round of food. And then there's one specific program that we have some funding for that I want to run by you. That is sort of it's kind of a method of getting at this coastal stuff. This is much more tactical, but I want to kind of run by the group a thing we're thinking of doing and ask you if it makes sense to you and if there's a way we can make it better. We're going to take a 5-minute break at this point. Thanks. For one-off targeted trips. And we bribe you to come and connect at Venture Cafe with good beer and good wine. And so there's bribery involved here as well. This is a kind of very practical kind of bribery. The idea is we say, look, come, bring your spouse or individual you would like to be traveling with. And we will offer you a pair of tickets to a cards game. We'll put you up in the Four Seasons for a weekend, and that'll be just you two. And then on Monday, we're going to ask you to. There might be a dinner or something in there, and And then Monday, we're going to ask you to sit down with 8 companies, and we're going to go through a fairly rigorous process of figuring out which 8 companies we want to sit you down with. And you can decide, is it half hour, 45 minutes, whatever the time you want to spend with each one is. We're going to, this is sort of a complete idea that I'm asking for feedback and reaction on. So I'm going to finish the idea and then say, how does this sound, right? So this is a little bit akin to what we sometimes call office hours for VCs in Boston. And we've done a lot of office hours over the last decade. And one of the things we found generally that's wrong with office hours is the allocation of the VC's time to startups is often not a good match. In other words, a VC comes in, maybe they're like a biotech VC, and somebody comes in with a medical device, and it's just really not what they do. Although someone kind of thought maybe it's what they do, it really isn't what that particular VC does. And another issue is that the companies are so not ready in some cases to be having that conversation that you're wasting the VC's time. And the problem with that is that you want them to come back.
Well, it's the wrong partner in the firm.
It's the wrong partner in the firm. Exactly. That's right. So what we're thinking of was a model where, first of all, we identify kind of good, strong partners, and in this case, I don't think it has to be apprentices. I think we can get general partners in many cases. And I've talked to a few, and they've said, yeah, I'd do that. And the idea would be that we say, okay, I'll pick on one of my partners at New Atlantic Ventures as an example, but just because I know him well. So Scott Johnson, he invests in advertising-oriented internet startups primarily. He's been in VC for 14 years. He had exits from the following companies. Enernoc was his biggest exit. Massive was another one, an advertising-oriented one that Microsoft bought. Here's his, this is a little pricey. And then we say, who wants to meet this guy? Make sure you're kind of appropriate. We get a bit of a list. And then we say, okay, you're going to need to have a local investor endorse you as being ready to have this meeting. It's not about whether you're a good guy or not a good guy. It's just whether you're ready to, to have this meeting. And we kind of have a ranking of some sort. So, somebody might say very ready or only a little bit ready. And we basically pick the top 8, readiest, companies for that particular VC. And then the next guy, or gal, might be someone in energy or life sciences or one of the other fields. So we have a funder that's lined up that seems open to the idea of paying for the boondoggle weekend and into the visits. Basically, it's a plane ticket, some hotel. We think we tried a couple different ways, but when you actually look at the total cost of this, it's just not that much. The notion is to have a very regular flow of these folks. I think you'd start with something like once a month. I actually think you could get this to once a week. That there are enough partners out there, there's enough funds that if you scaled this up, you could have basically a kind of an almost constant flow of coastal and even global capital. I mean, you could be reaching out to folks that invest out of London, folks that invest out of the Middle East. And over time, I think if it got some traction and started to work, you might not have to pay quite as much. In other words, you might say you've got to pay for your own flight or whatever. You can back off on that. But so if this is a straw man kind of concept, I'm just saying. So how does this feel? Does this sound like it's a good idea? What would you do differently, Steve? Matt. Sorry, Matt.
That's all right. I think that you make
this is Matt from Invisible Girlfriend.
An invisible boyfriend. She is. She's waiting in my car right now. She texted me just a moment ago.
Your keys for that invisible VC.
That's right. So I think that if you really want to draw, we're talking about driving ultimately local participation in investment markets as well as bringing out of town capital. There seems to be a two-edged sword. Yep. Forget the Four Seasons. Have people compete to be kind of the exchange student model, where they actually, a local investor, high dollars, gets to invite that person in their home. They're personally responsible for the wine and dining, the whole bit of, they're going to show off and do everything they can. It's a much bigger sales pitch for St. Louis. The next piece of that
so
is
you're going to ask Scott to sleep with the local investors,
perhaps,
in their home.
Whatever it takes. But you let them adopt the investor, because then what you're going to see in that conversation is they're going to be talking quite a bit about what it's like to invest on the coast versus here, and you're going to be able to get some of these otherwise not particularly obvious suspects here in St. Louis to understand some of the risk stuff by talking with their peers, or at least the people they assume to be their peers.
Well, that's interesting. So there's a kind of a big brother, big sister, mentor, or something like that.
Just tell the people here that they're the big brother, and tell the people coming in that they're the big brother.
Right, they're both
as long
the
as
big
you don't
brother.
talk about that,
Yeah, who's your
it's
daddy?
okay.
Yeah, all right. Dick?
Variation on that, and I've seen it work well in Denver when we did it there, and we did it some here with National Site Consultants, where they're sort of the drivers of decisions of companies on where they go. And the key, and it was more developed in Denver than here, but I like what has been suggested. You get someone here who is knowledgeable and is seen as somewhat of a peer to be a local host, and that develops a relationship that really extends well beyond the trip.
I think it's very smart. Yeah. Marcia, do you want to?
Well, yeah, I was just going to say that I think the key, because I did this many times, is the key is you as the individual. You have, or somebody here has a relationship.
So I have a lot of those relationships in Boston, and I think we need to extend that. Obviously,
what I'm saying is that you have some credibility to do the ask.
Right.
So what I would do is I would develop the relationship with this VC, so I have the credibility to do the ask.
Got it.
And then what I would do is get a sense of what were they looking for. I would get executive summaries from the companies that wanted to meet with that particular VC. And then we would work out who they would meet with. And then I also, while they were here in town, did connect them with our local VCs, because again, I do think that is an important part of helping to create that relationship.
Got it. So one of the key pieces here I'm realizing is, so I think of this as a given because I have those relationships, but if one didn't have those relationships, then it's a lot harder to do this, right? That is a great point. And I don't have those relationships nearly as deeply on the West Coast, so we would need to find, the folks that would and build it out. Yeah.
Well, I think maybe it's echoing a little bit of what Dick and Marcia said. I think it's very important that we identify the people in St. Louis who would be seen as peers, not as rubes they're coming to teach how to invest. And there are a lot of people in St. Louis with these venture contacts. If we just want to facilitate that happening, in particular, local potential representatives for these investors, so they got local board members and the like, that's very powerful, because one of the real issues with investing in the flyover zone is not just the flight, but I don't have boots on the ground. I don't have somebody that if something goes wrong can deal with the issue. And we've got the people here. I'm sure we know who they are, and we just need a way to facilitate that meeting would be very helpful.
Chris?
Can I claim one spot out of that 12-month period for an impact investor?
Sure, absolutely. Why not? Actually, I think I have the guy lined up. Yeah, so I mean, Willie Foote. Willie Foote, who is the FT's sort of best impact investor worldwide, is a WashU grad who lives in Boston. Yeah, and I think the WashU connection and some of these other personal connections, I think really can help drive. We can kind of crowdsource those relationships. Who knows people? Yes, ma'am.
Can you make it more personal and find, rather than a baseball game, maybe find out what they like to do, just like
So they might not like baseball.
Maybe.
Yeah. We could have kind of a menu of options. We have a proposal that kind of a Tinder element to it. I'm not sure exactly where you're going with that, sir, but
That'll take care of it.
Yes, Dave.
There's some industries where we have a huge footprint. I mean, everybody knows about St. Louis is only behind really New York when it comes to financial services. And so, depending on who they are, let's connect them with some of the people here and see that businesses don't just start here, they can grow here. So they're hooked up with Jim Weddle and Roger Ryan. Have them take them to Jim Weddle's car garage. I mean, whatever it is, and hook them up with the people at Wells.
And I'm going to build on that. This was, I think, Travis's idea. A lot of these guys are, they may be big time upscale VCs or whatever, but market, what is the word? But they also want LPs. And so one of our thoughts was to line up some institutional LPs, and that's part of the carrot for them to come. And if we get that working, we don't have to pay for the flight or the Four Seasons.
And in fact, just to add on to that, because I don't want to lose the thought, is St. Louis used to have a very robust corporate directed investment effort in the 80s. And it went away when a lot of those things went away in 89, 90. And so connecting those VCs with corporate folks that are maybe looking at doing venture investing would be very...
As co-investors, you mean? Yeah. Yes, sir. Who are you, by the way?
My name is George Bailey, and I work for Albury Bartlett Group, an investment firm, and also sit on the, yes, I really am named George Bailey.
It's a wonderful life.
And actually, Jimmy Stewart came and checked my roof yesterday, so and that is true. In any case, so I'm also on the board of directors for the Asian American Chamber of Commerce. I speak Mandarin Chinese, and we've got a really vibrant board. One of the programs that I'm in charge of working on right now is basically to help international students in St. Louis to see themselves less as getting out here for a job, which they're not going to get on our current visa program, unfortunately, but more as St. Louis marketers, turning them into marketers and salesmen so that when they go back to their countries of origin, they're making connections here that they can connect with their connections back in, whether it be China or Japan or Korea. I think that being creative and making those connections with other places, because the fact of the matter is, a lot of these students, when they come to the United States to study, they may kind of be in their books and whatnot, but the reason why their parents are sending them in the first place, those of wealthy background, is because they want them to be making precisely these connections. That's something they're not actually doing, and that's something that our program is geared towards changing.
Thank you, George. That's a terrific idea. A lot of times we've noticed in the Boston community that some of these students turn out to be, gazillions mega rich. Daddy owns this like half of China kind of thing, and it's a resource that we don't tap into. WashU I know draws, ancillary draw people from all over the world. Dan, and then this gentleman.
Yeah, I was just going to say that as an extension of that, I think another huge anchor that we have here are our universities in general. So I think, and there's tons and tons of alumni of WashU, of SLU, of all the great universities that we can directly connect to that are partners with venture firms. I think we was fortunate enough to go out to Silicon Valley on a trip on the Southwest flight, and WashU did a tremendous job of getting a bunch of VCs and investors from the West Coast into a room to meet with St. Louis startups. So I think the universities want to connect their alumni with startups and potential investments. I think we need to help enable that to happen, and I think they're already starting that. So I think that can be some low-hanging fruit that we go after.
Thank you. Please introduce yourself.
Hi, everyone. This isn't awkward. I'll stand over here. So my name is Avik. I'm one of the founders of Idea Labs. So I'm a WashU MD PhD student. So just a brief question based on the idea of bringing venture capitalists in. One of the things that we hear about a lot is that people don't invest unless they get to know the person. And we've seen that with our own startups, that we have a lot more rapid investment in a very early stage when the person knows each other. So with regard to bringing people in, it would be nice to bring the same people in repeatedly and build those sort of relationships rather than maybe 100 different ones you see them once. Talking actually about your idea about with alumni, so we've actually had a lot of talks with alumni and development, and they have offered to take our teams to Silicon Valley. They take them around. They repeatedly bring in alumni. There is this effort to actually capitalize on the alumni. There's supposedly some change in how we can advertise when we're looking for investors. So there is at least a theory that alumni and development would actually do that advertising for us. So that's been sort of in the works. I'll believe it when I see it, but WashU's been very, very helpful to Idea Labs on this. So those are my two basic points.
So yeah, the law change was part of the Jobs Act, and it's now legal to advertise to accredited investors, which of course you're going to hit non-accrediteds by that, but as long as you're targeting accredited investors, that's now okay. Once true crowdfunding comes into effect, you'll be able to do general solicitation. Dan, I guess, do you have your hand up? No? Okay, go ahead.
Just a thought. The number one question everyone asks in St. Louis, I'm told, is where'd you go to high school?
Where'd you go to high school?
When I dig a level deeper and look, what, for instance, the president of Y Combinator, Sam Altman, is a Burroughs grad. There's an incredible wealth of talent that has migrated out of the city into places like Stanford and then on to venture funds. Sam and of course Jim McKelvey and such being just two. Sure, John Doerr, of course, leveraging them as part of the tactic.
So the St. Louis alumni is not just university, but also some of the high school alumni. A couple last comments. This is great input for the Venture Cafe effort. Yes, Matt.
Not so much a comment, but a question. Is that you've got 15 bullet points on the thing. What's the next steps from you? What happens with this stuff? What's next?
So a couple things. First of all, so Venture Cafe is funding, is sourcing funding specifically for this one program. Thank you for asking the question. It's the right last thing to focus on. And so as we were building that, we wanted to sort of make it better before we kind of set it in stone. And I think there have been everything said here would make this better, much stronger. So thank you. So for the broader set of initiatives, I was talking with one of the group, the guys here earlier. For instance, 15. This was off This was in the side conversation, but I added it to it. This gentleman, where are you? Your name again? Dan. Was saying, maybe we should have themed St. Louis located sector gatherings, like, more, let's have a plant science innovation focused, like tiny little South by Southwest, but just around that, where we're the logical place for it. That's an example, right? So here's a good idea. You take an idea like that. My experience in Boston is that the way that this kind of thing gets delivered is that a champion stands up. That somebody, perhaps somebody who was in this room, but perhaps somebody that hears about this, says, I've got an idea, I want to pursue that. The funding is generally there. I find that if you well articulated, there are pockets of money in St. Louis to pay to get these things going. Often in this case, if it's themed, the companies in that sector are often willing to help. So it comes down to a group picking up one or two or three of these ideas and saying, I'm going to run with it. So in the layer cake, I think Ginger liked that idea, and it's the sort of thing that, since Arch is the first in line, I think it's something that would be a natural for Arch to explore when they're looking at giving 50K, helping somebody think about, do they line up several layers beyond the 50K as part of that, that grant? That's an example where that might be a natural home for it. We're going to take these, we will do a distribution to this whole group of these ideas, and we'll also do a blog post on it for people who may haven't been here, and feel free to, do whatever you will. The ideas, they're owned by everybody, right? But more specifically, if there's somebody here that feels that they have the wherewithal and interest to run with one of these ideas, I'm asking you, I think we're collectively asking you to raise your hand and offer to do that. We can help. We know who came today. We can help by kind of reaching back out to that same group and saying, this person's running with this idea. They're looking for this kind of help. Can you help? In my experience in Boston is that it's 100 small efforts or 1,000 small efforts that actually collectively move the needle. And some of them aren't that small. I mean, Idea Labs is not a small effort, for instance. It's a particular concept about how the needle can be moved for some companies that's getting funded, that's getting support from the university and from CIC and others. It really takes a group of people to say, okay, we're gonna do this. And today's conversation is really to encourage people to start thinking about these ideas and hopefully spark in individual minds the desire to maybe go after one or another of them. Hope that helps. Thank you.
One comment? Sorry. So I love the layer idea, so I love to work on that, so I'm volunteering ahead of time. And second, the space is gorgeous. It's my first time here, and well done to the team.
Great job. Thank you. I don't know where Dugan is. Dugan and his team spent an incredible amount of time on this. This is just the beginning. If it wasn't a safety issue, we'd take you upstairs where we're doing a whole floor. We're redoing an entire floor to feel also kind of like this vibe. We're really applying 15 years of experience about how to design functional space for startups in Boston to the St. Louis community here, and you've seen some of the results of that over at 4240. We're also really trying to respect and involve and use the existing heritage of the building. This is the Doris Motor Company's building that was built, do you recall what year? 1906.
Old enough to remember that? She bought her first car here.
Yeah, I mean, this is a company credited with several major innovations in the automotive industry. It's part of the history, and I hope you kind of see a combination of both, the new and respecting what was here. That was our goal with this. I think you can feel it in the building. We have some big plans beyond what you see here. This is a relentless series of interventions to change the city, which is part of a larger mission that CIC has to change the world through innovation. We're seeking to be the sort of dumb, boring, simple platform on which others stand in order to change the world. And we think that it's possible to take some of the things that slow you down and are awkward in building new businesses out of the way, whether it's making it a little easier to find capital, whether it's making it a little easier to find people to work with, which is one of the things the Venture Cafe does in terms of getting people together and building those human networks better. The physical infrastructure is perhaps one of the easiest pieces for any company, but just having it out of the way saves you a lot of time. And for those of you here at my talk earlier this afternoon, we see these innovative new ideas as the key driver for change on the planet today. It's almost the only driver right now for change. There's almost nothing else beyond innovation in technologies that is significantly shifting the human experience. I know that's a big statement, but if you run through it and look for where human experience is being changed for the better. There are some that are changing for the worse, but if you're looking for where it's being changed for the better, it's almost entirely technological innovation or new ways to apply technology, like your invisible girlfriend. And for the better. Some for the better in a cosmic sense, some a little base, but hey. So we think this is the way to do it, right? So, and it's mostly about the people interactions. We think that the physical architecture supports the positive people interactions. And we think that St. Louis in particular it was interesting to us because it has so much of the basic ingredients, whether it's money or innovation ideas or a huge talent base that somebody was mentioning. All these people have gone on to tremendous success starting in St. Louis. St. Louis is producing some of the biggest players in venture capital and entrepreneurship that are big now around the world. So you've got those ingredients, you're starting with those ingredients. And so we thought that perhaps we could have some impact in sort of how those ingredients mix and produce high employing, impactful companies. So thanks very much.